Good morning, traders. Today is Tuesday, December 6th. My name is Charles, and this is the Pirate Traders live stream. And the market is open. All right, so what do we expect here today? Well, yesterday we pulled back down into a previous balance area. So the first order of business this morning is to note that the highest probability is a continuation to the opposite end of balance. Now, does that mean we have to go to the opposite end of balance? Of course not, right? We could easily turn around and break out from here, but the highest probability is that we're going to the opposite end of balance, which is down here around 45, okay? So that's the first thing that I'm paying attention to. But what that also tells me is, we're opening right in the middle of a balance area. And opening right in the middle of a balance area means it's going to be incredibly difficult for the market to pick a direction. We're likely to do a lot of chopping around, a lot of fooling them long, fooling them short, squeezing them both directions before the market starts to make a move one way or another. So I'm keeping that in mind as well. The highest probability is lower, but it's probably going to be a very choppy trip to get there and very difficult to read. And so now I'm asking myself, okay, I've got those scenarios in my mind. What will be the signals that will let me know what is happening and how I should trade it? Well, the first thing I'll be watching is the overnight low and the prominent point of control from the overnight. Okay, the prominent point of control is around 4,006 and the overnight low is around 39.95. Okay, so which of those two levels does the market break first? Does it break through the POC from the overnight or does it break through the low? Once it does, what happens from there? If we push through the point of control from the overnight, does it become support? If it does, I'd be looking to test the overnight high. Why? Because we left behind a weak reference there yesterday. Okay. If we push up to the point of control from the overnight and reject off of it, I'd be looking to test the overnight low. And then I would play the same game with the overnight low that I was playing with the POC from the overnight. If we push below it, do we get resistance? In which case I look for continuation lower, or do we just poke below? In which case I look to visit the opposite end. So basically, as long as we're inside the overnight range, we're expecting chop. But which direction it breaks, whether it can get above the POC and find support or get below the low and find resistance, either one of those will give us insights as to what direction the market is likely to try to move. But with the context that we know it's going to be extremely choppy. It's not going to go in a straight line. So just because we get above the overnight high doesn't mean we're going to go straight up or vice versa. It's just a piece of data, a piece of information to take into account. Okay? Other than that, it's going to be tricky. We're opening inside the previous day's range, right in the middle of a value area after an overnight where the market just rotated in a tight range. So the idea of spending a lot of time making you think they're going to go up, then making you think they're going to go down, and then up, and then down, and then up, and then down is very, very probable here this morning. So don't allow yourself to get emotional. Accept the reality that we are in a chop zone. And look for opportunities from there. Good morning, Nor Auto Trader, Nap, Daniel, Morty, John Lash, Nilesh, Infornity, ES Trade Monkey, Andrew, TV, and Pavel. Welcome, everyone. Novice Trader, good morning, sir. BBQ. Morty, because it's a chop zone. We are chopping it up. Yeah, I would say this is the choppiest of chop zones right here. The middle of a balance area after the overnight rotated like that, it's going to be choppy. So Charles, you never really talk about the overnight point of control. Why are you referencing that today? Well, it's not really the fact that it's the point of control that stands out to me. It's the fact that that is the largest node where the most time traded. It is also the largest node where the most volume traded in the overnight. And it's also the base of the single prints down that we never tested yesterday. So it's that second distribution to the downside. So that to me almost makes it like this is a high, the way I would normally treat like an overnight high. This is like, if we can push above there and find support, it's, you know, it's trying to go higher. So that's why this level stands out to me today. Global trading, the low of the balance area is 39.40. Yes, sir. I have it as 45, but pretty much anywhere in this general area is what you're looking for. John Lash, the Q is slowly making its way to yesterday's low. Say it ain't so. Yes, sir. So the fact that the NQ has pushed below its overnight low is a little bit bearish to see. I would still consider this a chop zone inside yesterday's range, but yeah, that's quite bearish to see. It is worth noting the high looks weak because it's so close to the closing price from yesterday. Yes, sir. So you got a weak high, increasing the odds of more chop, but getting below the overnight low is bearish to try to test yesterday's low. And if you get below yesterday's low and you find resistance there, extremely bearish for continuation lower. But I will just give them a chance to chop here because I think they're going to do some chopping. Don't forget, it's not, you don't want to short when you get to yesterday's low because they could poke below there and then come right back up. You want to wait for that resistance. Uh, solid joke, John Lash. Solid joke. Uh, Okay, week high, week low. Indecision on both sides of the market. Infinity Q testing yesterday's lows. The question is, does it get new sellers down there? Does it get resistance? Yeah, you got a weak low right now. It doesn't matter that we test it. It only matters if there's new sellers that want to take the market lower once we get there. That would be very bearish to see. Okay, so the ES is now below the overnight low. That is bearish, as it increases the odds that we're going to test yesterday's low down at 39.87. So we are now looking for resistance right here around 95 for continuation lower. That resistance would be bearish. We also, right there at that resistance, have a low volume node in need of backfilling. Stephen, where could you tell if there were new sellers if the price keeps going down? The closest signal that you can use is the ticks. Generally, if the ticks are below the zero line and they continue to push lower, it's a sign of new sellers. Each new push lower is new sellers entering the market. So that's one signal you could look for. Once we push below that overnight low, do the ticks continue to trend lower and stay below the zero line? Or are they able to poke back up? If they poke back up, you don't have the sellers. And then literally price itself. The market will push down, and then the price will try to get back up into yesterday's range, and it won't be able to. That too is new sellers. Why are they new? Well, because if they were old, they would have taken the market lower. If they'd gotten short up here, they would have taken the market lower. So if they're selling in the resistance at the previous day's low, then they're new sellers, and that's why they're getting short. They're seeing that the market is making a lower low and a lower high on the daily. They're seeing that value is lower, and they're trying to get with that momentum to the downside. So they may not have made that decision until the market pushed below the previous day's low, making them new sellers. And that is what we're looking for. All right, so I am now bearish for continuation to the downside. It is a opposite end of balance trade, looking for the market to work its way towards that opposite end of balance. Remember, most of the time, a majority of the time, when you fail to break out of a balance area high, when you try to go higher and you can't, and you pull back in, generally most of the time it means you're heading back down towards the opposite end of balance, the area where you ran out of momentum before. Okay, so I now believe that is the highest probability that we are working our way down there towards the 40s once again, looking for buyers in there. I do not think we're going to go in a straight line. I think there will be a lot of support right here around the 70 area, and that it will take a lot of grinding to get through there, but the momentum is clearly to the downside. So the bears are in charge. Let's see if they can get themselves all the way to the opposite end here today. Can they push it? And of course, we are looking for resistance at the halfback or yesterday's low for continuation lower. Michael, I'm waiting for Charles to finally announce today I believe the market will move in a straight line. Well, it did. I just didn't believe it when it did. Back here, I didn't believe it. I could not believe it kept going in a straight line. I just always make that reminder because what happens is a lot of time traders, they get a trade idea in their mind. I think we're going to get resistance here and continue down towards the opposite end of balance. And when it doesn't happen right away, like when the first push up doesn't instantly get smacked down, they suddenly start to question their narrative in their mind. And they start to be like, well, am I right? Am I wrong? Should I get out of the trade? If I get out now, I'll lose less money than if I get out where my stop was. And their mind starts to go absolutely wild. So when I know it's not going to go straight, I love to just remind people like, hey, just relax. Let it slowly grind its way down. And as long as it doesn't break the high, as long as it doesn't do something that tells you that momentum is over, just trust that it's going lower. It's heading down towards that opposite end. It really helps to keep you in the trade in these choppy markets. So here we go. Perfect example. We were expecting resistance at yesterday's low. I guarantee you there are people who were short that are exiting right now purely because it just didn't find that resistance. So by knowing that the probabilities favor that the market is going to go lower, knowing that our ability to push below yesterday's low, creating a trend on the daily. We've got a lower high, a lower low and a lower high, okay, and value lower. And the fact that we're in the middle of the balance area, I am much more comfortable letting this thing come back looking for resistance inside yesterday's range because of all the other pieces of data lining up. Okay, and there's your new sellers, right? We were looking for resistance at yesterday's low. We were looking for those new sellers. They were able to get the ticks all the way back up above the zero line. And then what happened? Some new sellers got bearish and entered the market. So that's a little bit bearish to see. All right, well, we're starting to get a little taper here. Let's take a look at the ticks. Okay, yeah, that zero line is holding. If they're able to get those ticks back above the zero line, they may want to head back and retest the overnight low again. But as long as they're below, it's still new sellers. Looks like an iceberg. Oh, no. Baby Q, man, it sucks to get stopped out and then it goes down. Yes, sir. But you can just look for the next resistance. As long as the momentum is down, it doesn't mean there was only ever one chance. So just say to yourself, damn it, I missed that trade. All right, let me look for the next. Okay, so now we've got the initial balance to the downside with the B period pushing below the A period low. That's a little bit bearish to see. We also have now pulled the value area all the way up against the low of the day. That is also a sign that the market needs more excess to the downside. So that too is a little bit bearish to see. Also, the B period low is weak. That too is a little bit bearish to see. So it looks like the market's just looking for a little bounce here to test resistance above. But there is still a lot of bearish momentum. Petrus just did a beautiful break and retest of 11,740. On ZQ, 11,740, that would have been yesterday's low. Yeah, I wasn't watching it in real time, but anytime you break below a previous day's range, often the low of the day becomes the resistance. Also another level, again, I wasn't watching it at the time, so I don't know where halfback was, but another really common level is halfback. My guess is earlier in the A period, halfback was up there too. So it probably just pushed right into two perfect resistance levels and then broke lower. But I would have had to have been watching to see. Okay, as we head down to test 71, that was the base of single prints up from a previous day, which often acts as support. It is also a very large volume node right here around the 70s, which will also act as support. So I do think we should get a little bounce here and retest the resistance soon. All right, well, they're front running the base of single print, so it probably won't act as support now. It'll probably crash through since there's a bunch of weak hands trying to front run it. And we know where they're putting their stops down here because they never learn. All right, so here's that potential support. Can it hold? Nope, not with those stops down there. Sir Topham Hat? Where do you guys come up with these names? Sir Topham Hat says, I've been found. I've been discovered. Man, I am quite surprised we're not getting any kind of bounce here. That's very weak. It's just a sign there are no buyers willing to do business here in the middle of the balance area. Increasing the odds. We got to go down to the opposite end looking for buyers there. Look at that. No bounce at all. Crazy. Okay, well, obviously that's bearish, right? If there were going to be buyers waiting anywhere, this node would have been where they were waiting. So that increases the odds. We're heading down towards 45. It's Top Ham from Thomas the Tank Engine. I just watched something the other night that referenced that. Oh, Bullet Train. It was that movie Bullet Train. That's funny. Kathy, next support. Tough to call. It could be anywhere. It could be anywhere. As I've said with a balance area, you know that the market's heading towards the opposite end, right? You know that once we failed to go lower here, it meant we were heading up towards the opposite end up here. But I couldn't have guessed. Let me just delete all this. You know, I knew when we found support down here that we were heading up towards the opposite end up here. I never could have guessed this is where the market would run out of steam. You know what I mean? So I feel the same way to the downside. I think we're heading down towards that opposite end. I don't know exactly where the support will be. And I have a feeling, as I've said like 50 times today, I have a feeling it's going to be a very choppy, grindy way to get down there. And so a lot of this is going to feel like support today, but the market will just keep going lower. So it's tricky. Instead, I'm just focusing on the momentum. I'm not trying to pick where the bottom will be. I'm trying to recognize when the momentum down is over. As long as we still have momentum down, I will assume the market's going to keep going lower. And of course, those signs that momentum would break would be cessation of the trend. Well, step one, find support. We haven't done that yet. Then get cessation of the trend, get the ticks above the zero line, so on and so forth. But until they've done all those things, until we've gotten those market-generated signals, the assumption is it's just going to keep going, however slowly it does. Nunez, design knob. Out of curiosity, without specifics, are you up year to date? If you're thinking about using design knob's pappy calls as signals, I would not. I would not use those as signals. So obviously this is some interesting behavior to look at here. It would fool you into thinking that the market is making good taper on the low, which would imply that buyers are beginning to step in. But I would argue that it's probably not the case, that it's actually more profit taking from the sellers. We have a weak low because it was all buyers right at the low level. So that increases the odds that the market needs to head a little bit lower to bring in some more two-sided trade. We also have the value area, that is the blue box around price, is pushing right up against the low of the day. That too is often a signal the market needs further downside continuation. So it does feel like they're trying to turn this node into support, but they're doing it with weak hands. And that is not to be trusted. See, weak buyers, man, they just keep buying that exact reference right there at 65.50. Where are they putting their stops? Joe Schmo, who's going long right here. Where do you think he's putting his stops? Where do you think he's building liquidity? Design Knob, please tell me you're not buying the bottom tick of the day. Right? Like I could allow if you had an order sitting in here as the market was coming down, but I will be very upset if you're buying right now. As it was coming down, yeah, that's okay. I mean, it's not a trade I would personally be interested in, but there was certainly a case to be made that the market should at least get some kind of bounce here. But again, I just think to myself, if the market's going from here down to here, why wait, not trade, and then get into a long here in the middle, hoping it reverses and comes back up? Better to just trade with the direction of the momentum. But I understand that. That's just not my type of setup. Design Knob was just one MES. Yeah, but we've been over that before, though. I don't trade like that. I used to. I learned better. I don't think like, well, I don't trust this setup, so I'll only get in with one MES. Like, no. I either trust the setup and I'm willing to risk 2% of my account, or I'm not. And I don't take trades where I don't trust it, where I don't feel like I have probabilities. Because those little losses, just one little MES at a time, they add up to really taking a big bite out of your profits. So that to me is gambling. Going like, I'm not really confident it's going to work, so I'll just throw in one little MES. It's like you're gambling is what you're doing. You're feeding your psychological addiction to take risk as opposed to calculating and managing your risk, which is the key to profitability. Just food for thought. Design Knob, I'm fairly confident that it was a good entry, so I don't regret it. I don't believe you. I don't believe you for a second, Knob. You didn't think it was a good entry, or you would have gotten in with more than one MES. The fact that your response was, oh, it's just one MES, I'm playing support, that tells me about your psychology. That tells me what's going on in your brain, which is you got into a trade that you didn't trust. You got into a trade that you were not confident with. And I promise you, you'll make more money if you stop doing that. If it's not a good enough setup that you're willing to take real risk, it's not worth trading. Because I love you. That's why. Scott, why are you poo-pooing one MES? No, I'm all for taking a one MES trade. It's the conceptual idea that I'm really trying to, and not just to Knob, to all of you, to every single one of you, is like, you've got to change the way you think about trading. It's too many traders have this idea they have to be in a trade. If the market is moving, I have to be in a trade. So if I wasn't confident enough to get short up here when we broke the overnight low, looking to test the opposite end of balance, well, then I'm sitting here and I'm watching the market trade lower and I'm feeling an emotion, right? Which is the feeling of FOMO. I'm feeling like I missed my chance. I didn't get in the trade I should have gotten in. So what I will do is I will try to fix that feeling. I'll take those emotions away. And the way I do that is I look for a trade. I go, okay, I didn't get this trade, so now let me find another trade. And then I look at this big node of support and I say, okay, well, that's a lot of volume. There's a very high probability. It's the node of death, right? There's a pretty high probability we'll find some support there. So then I throw in one MES contract. Why? Well, I'm not willing to risk 2% of my portfolio. I just needed to be in the action. I just needed to do something. And this is a something. It gives me something to do. And I used to think that was a good thing. I used to think coming up with little tricks to allow me to participate so that I can get rid of those emotions, those feelings of like wanting to participate and not being able to. What I have learned is those actually end up hurting my profits in the end. They're little tiny losers, one after another. You may only lose, $20, $50 or whatever in each trade, but over time they add up. And so if you can completely eliminate it and never ever get into one of those setups, never ever get into a setup just because you missed the previous trade and you just desperately want to get into one, you'll have a better win rate in the end. So that's sort of what I'm referencing. It's not the specific trade setup of buying support. That I'm okay with. It's the idea of, oh, well, I'm just throwing one MES at it. If one MES is your trade size, then go for it. That's fine. Scott says, I'm funded. My max daily risk is about 2%. So until I hit some profit, I don't trade full size. I just scale. I would say if that works for you, that's a good strategy. I can see that helping to manage emotions and stuff like that. But for me, that wouldn't work, right? Because I never know how many opportunities the market's going to give me. So I have to take full advantage of every opportunity. If I started small, I might be afraid I only get one trade today. I only get one good setup and then I traded it small. So I trade every setup with the same size, the same amount of risk. And I just wait for the ones I'm certain of. Fighter pilot, a lot of people say part of trading is being comfortable, being uncomfortable. I disagree. Why feel uncomfortable at all unless you are guessing or didn't prepare for the session properly? I know what you're trying to say, but I do disagree because the market is random, right? So sometimes you can do everything right. You can do all your homework ahead of time. You can come into the day fully prepared. You can be calm, you can be rational, you can be patient and wait for the absolute perfect setup. And then the market still goes against you and you still lose. And I have not figured out how to not feel uncomfortable in those situations. You just accept it. You accept that the discomfort is part of the game. Michael says, getting a bounce here at this prior POC of an extended trading hours. Yeah, I just call it the note of death. It's probably been like 8 different POCs by now. I mean, it was closing price, opening price. No, it wasn't anybody's POC. Very close though. See, all the trading has been back and forth through it. That's what's so interesting about this random node. Right here at 69, all the volume is just above or below it over and over again. So it's like a magnet. It just keeps pulling price back to it. Every time price tries to break away from that node, it gets pulled back. As I've said before, my assumption, if I had to guess, having no idea, is that there's somebody with a huge options play in right here. Long dated, you know? Somebody bought calls or puts or sold calls or puts, you know, to expire above or below 70. And it's just really messing with the market every time we get there. But we just broke through. Okay, so here in the C period, we've just created a poor low. We also left behind a set of single prints from the B period. The single prints increase the odds that the market will try to fill the single prints. The poor low increases the odds that the market will push away from the poor low. But we've got lots of resistance. We've now got this node that was acting as support. Does it become resistance? And then we've got the base of those single prints at 77, which also act as resistance. So either one of those should smack us down to repair the poor low, and then the market is one time framing lower, which is bearish. As I said before, as far as targets for the day today, I think getting down here towards the opposite end of balance, so down here towards the 50s, is very doable. Where we find support, I cannot tell you. We could just barely, like we did here, we could just barely touch it and then turn around and head higher. We may come crashing and burning through it and then come back up to test it for resistance. I mean, there's just no way to know ahead of time how the market's going to react. But I do think that is the magnet that is pulling on the market for now. Okay. With that, I will say goodbye. Goodbye to you and all of yours. And I look forward to seeing you here tomorrow morning. 66 likes? You bastards. Tomorrow we got to smash that like. Got to smash that like. All right. Thank you very much.